Have you ever wondered if the price of Bitcoin is being manipulated by major players on Wall Street? Hello everyone and welcome to our channel dedicated to the world of cryptocurrencies. Here you will find market updates, project reviews and advice to help you make informed decisions in the world of cryptocurrencies. I invite you to follow me on the channel to always be updated. Today we will talk about recent events that suggest a coordinated effort to lower the price of Bitcoin. It is worth exploring the details to understand what is happening behind the scenes. Let's find out why Wall Street might be interested in lowering the price of Bitcoin and what this could mean for the future of cryptocurrencies. Bitcoin, and by extension the entire cryptocurrency market, represents the first time in history that retail investors had a significant advantage over institutional players. For nearly a decade, everyday people like you and me were able to invest in Bitcoin before traditional financial institutions. However, the introduction of Bitcoin ETFs has changed the game, making it easier for Wall Street to participate. So, why would Wall Street want to drop the price of Bitcoin now? The answer lies in strategic entry points. Institutional investors often prefer to purchase assets at lower prices to maximize their potential returns. If the price of Bitcoin drops significantly, it represents a more attractive buying opportunity for these large players. The launch of Bitcoin ETFs has allowed Wall Street to gain exposure to Bitcoin in a more regulated and accessible way. BlackRock, one of the largest asset management firms, has been at the forefront of this movement. The approval of their ETF marked an important milestone, but also raised questions about the potential manipulation of Bitcoin's price. Larry Fink, CEO of BlackRock, has been outspoken about the potential of Bitcoin ETFs. However, there is speculation that the enthusiasm may be a facade, with the real goal of driving the price down for a more favorable entry. This notion is supported by Peter Thiel, a venture capitalist and former CEO of PayPal, who suggested that Bitcoin may have been co-opted by institutional forces. Peter Thiel's perspective on Bitcoin has evolved over the years. Initially, he was an ardent supporter, seeing Bitcoin as a revolutionary asset that could challenge traditional financial systems. However, his recent statements reflect a more cautious stance. Thiel has expressed doubts about Bitcoin's current investment potential, suggesting that his original ideological vision may have been lost. In a recent interview, Thiel mentioned that although he still holds some Bitcoin, he is not that optimistic about its dramatic rise in the near future. This shift is significant, given Thiel's influence in the technology and investment communities. His concerns highlight a broader trend of skepticism among high-profile investors regarding Bitcoin's current trajectory. Several indicators suggest that Wall Street is actively trying to drive Bitcoin prices lower. One method is through regulatory actions. Recent moves by the SEC, such as postponing the launch of Ethereum spot ETFs and lawsuits against companies like CryptoCoinStories for alleged securities violations, create uncertainty and negative sentiments in the market. These actions may cause temporary dips in cryptocurrency prices, which could be part of a larger strategy to depress the market prior to a strategic entry. The SEC's focus on more tightly regulating cryptocurrencies aligns with the interests of institutional investors who benefit from lower prices. The media also plays a crucial role in shaping public perception and market sentiment. Recently, there has been an increase in negative news about Bitcoin, with headlines casting doubt on its future growth. This change in narrative may influence retail investors to sell their holdings, contributing to a decline in prices. Despite the current negative sentiment, there are strong arguments for a potential rebound in Bitcoin prices. The delay of Ethereum ETFs is temporary, and once approved, could bring significant capital inflows into the market. Furthermore, Bitcoin's fundamental value proposition as a decentralized digital asset remains compelling. Prominent investors like Dave Portnoy have expressed intent to buy more Bitcoin if prices fall into the $40,000 range. This sentiment is shared by many retail and institutional investors who see lower prices as a buying opportunity rather than a cause for concern. Wall Street's current efforts to push Bitcoin prices lower could be seen as a strategic move to enter the market at more favorable levels. While this creates short-term volatility, the long-term outlook for Bitcoin remains strong. Investors should remain informed and make decisions based on their risk tolerance and investment objectives. As we navigate these turbulent times, it is essential to keep an eye on market developments and regulatory changes. The interaction between institutional investors, regulators, and market sentiment will continue to shape the future of Bitcoin and the cryptocurrency market in general. When people in the FBI tell me they would much rather criminals use Bitcoin than $100 bills, it suggests that perhaps it's not working exactly as intended. Have you sold any of your Bitcoin? Big Wall Street investors are trying to bring down the price of Bitcoin, and not just Bitcoin but the prices of altcoins as well. Looking at the chart, you can see that Bitcoin fluctuates from the highs of $73,000 to the lows of $57,000. Remember, Bitcoin and cryptocurrencies represent the first time in history that retail has been able to get ahead of Wall Street players. Ordinary people like you and me have had a 10-year head start on traditional finance and institutional investors. Now, thanks to ETFs, Wall Street is able to get in easily. The only problem is that these prices are not low enough for them. Maybe Larry Fink with BlackRock's ETF has succumbed to the forces, or maybe it's more that Bitcoin has been co-opted by them. They don't want to buy here, they want to buy lower. Traditional finance investors are trying to push the price of Bitcoin down. American venture capitalist and former PayPal CEO Peter Thiel suggests that Bitcoin has been co-opted and is not really a good investment at the moment. Some interesting investment advice from Thiel, who used to be an ardent supporter of Bitcoin. His current position is a stark contrast to what he has said for years. You may remember him expressing optimism about Bitcoin's potential, calling it the digital equivalent of gold and noting the opportunity Wall Street and Silicon Valley missed. Despite the current negative sentiment, there are strong arguments for a potential rebound in Bitcoin prices. The delay of Ethereum ETFs is temporary, and once approved, could bring significant capital inflows into the market. Furthermore, Bitcoin's fundamental value proposition as a decentralized digital asset remains compelling. In conclusion, Wall Street's efforts to push Bitcoin prices lower could be seen as a strategic move to enter the market at more favorable levels. While this creates short-term volatility, the long-term outlook for Bitcoin remains strong. Investors should remain informed and make decisions based on their risk tolerance and investment objectives. That said, thanks for following us up to this point. Don't waste your next crypto flight. Thanks for being with us. If you want to stay up to date on the latest news from the crypto world and not miss out on a crypto adventure, hit that follow me button and activate the bell. Ready to go? Then see you in the next video.